Okay, so just a quick trade recap for today, July 25th. So the first thing I noticed was obviously we are trading lower. Okay, we've been very bearish as of recent. Okay, however, that has allowed us to reprice into a discount of this range here, of this weekly range from this high or this low to this high. We repriced into equilibrium, into a discount, and this down candle here is actually an order block because we're within the discount of the range. If this candle was above the discount and it was in premium, then it's not an order block. So it's in discount, it's an order block. So because we traded into this order block, right, I was looking for some potential bullishness just on today's candle. Okay, it's a bullish PD array there, and then when you go down to the daily, you also see we were trading within this daily fair value gap. Now, yes, it has already been traded into, and it was traded back into a day after it was formed. Okay, however, this was still a viable PD array for me because it hadn't traded back into the equilibrium of the fair value gap yet. Okay, on top of this, so now you kind of get a sense of what my bias was and why I was bullish. Now I had to find my model. So if I go to the 1 hour, and just another reason to be bullish was how smooth these highs were here. Okay, and on the 4 hour, we are currently trading within this 4 hour trading range, and we were in a deep discount. Okay, that's another reason to be bullish. Okay, now again, the 1 hour showed you how smooth these highs were here. That's what I wanted to see get taken. That's what I aimed for with my take profit here, you see. And so all I would need to see, to keep it very simple for you, I just need to see my model take place within a higher time frame PD array. So we have two of those. We have the weekly order block and we have the daily fair value gap. So my model took place in both of those, right? I traded the 2022 model, ICT's 2022 model. I need a sweep of a low if I'm bullish to then target the highs. We got a sweep, we got distribution higher or displacement higher, whatever you want to call it. If you go to the 5 minute, I think I actually found on the 4 minute is what I used for my inversion fair value gap. Now, this is a little bit different than how ICT would enter off of the 2022 model. I use fair value gaps, but I also use inversion fair value gaps. So in this case, what that means is this is a bearish fair value gap. So price is supposed to, right? If people watch two ICT videos and they think they're, the best trader in the world, they think that every bearish fair value gap is meant to be respected and we should have gone lower here, right? Okay. Well, it becomes an inversion fair value gap, and you can use it actually for buys if we trade above it convincingly, which we did, and then tap back into it, and then price can send from there. So you can see price tapped into it off of this candle here, okay, where the dotted line is getting shown there. And so that was my entry off a limit order, and I targeted this high here. Now, anyone that tells you you need to have over at bare minimum 1 to 2 risk to reward ratio is not profitable. Okay, they're just not. As long as, in my opinion, you're risking less than you can win. So that means anything 1-to-1 or more. If your model is present and every box is ticked, there's no reason you should sit out of a trade just because the reward isn't big enough. Okay? Again, as long as it's over a 1-to-1. But these people that are saying, oh, I need 1-to-3 risk to reward ratios, I need 1-to-4. You know what happens when you do those type of risk to reward ratios? Your win rate goes down. And that's fine if you can handle that. Me personally, I want to have a higher win rate. So I'm okay with a 1-to-1 risk to reward ratio. I'm okay with a 1-to-3 risk to reward ratio as well. It's whatever the market's giving me at that time. So just my 2 cents there. But yeah, I got in off of the inversion fair value gap, off a limit order, targeted those highs, and I set my stop loss underneath this bullish fair value gap because I wanted to just give it that respect that we could end up trading back to there to then bounce. If this wasn't present, I could have had a better risk reward ratio. I would have just had my stop loss underneath the inversion fair value gap below, okay, for 1-to-3. But that was there, so I had to price that in and respect it. So here is the proof of entry on Top Step here. You see the top one, July 25th, 447 here, plus 447. Risked, it was actually like a 1-to-1.3 risk reward ratio, I think. So I ended up risking like $340 to make 447. Risking 1% of my account size on a $50,000 Top Step account. So there we go.